Hey everyone, it's Alyssa Corum, and I am joined by IABD head market strategist Mike Webster, and we are recapping another week of trade for you. Hey, how's it going, Mike?
Oh, great, man. It has been a fast week, really fast.
It honestly has. And it's been a roller coaster to nowhere essentially in the market. So we are going to break down in detail the week's action and what you should expect as an investor for the coming week. So we're going to kick things off with a look at a daily chart of the Nasdaq. Mike, why don't you go ahead and pull that up for us?
Yeah, sounds good. So this is always where you want to start off whenever you're looking at the market, is to start with the daily of the Nasdaq, assess where you are, where it looks like you're going. And we're going to talk more about where we think we're going throughout this. But this was, just basically a sideways week of putting in time. And I think you said it exactly right, a roller coaster to nowhere. We left last week with an expectation of sideways or down, and that's what happened. We came in pretty hard there. What was unique is this was our first time since really we've started this bull market where we had 3 days down in a row. And that's not a huge deal, but it was enough of a deal to kind of say, hey, there might be a character change going on here. And we were coming close to the 21-day exponential, which is the
Mhm.
blue line. And I really thought that we were going to come crash below that and most likely have an upside reversal like we had here, here, and here. And that's how I was positioning it. But sometimes you get some positive news. And what happened is after the
Yeah.
close on this day, what happened? What was the big event of really nothingness, but it was big
Yeah,
for everybody.
Tesla, the stock split, following Apple's lead, I guess, with that stock split announcement, getting some investors out there excited about that, but not you.
No, and I do have a position in it. Anyone who watches our favorite morning show, I can't remember the
Mhm.
name of our favorite morning
I don't know
show.
why you can't remember it because you're on it every morning. I don't know, some amnesia, but IBD Live,
IBD
the morning
Live, yeah,
live
it's just
stream.
a shameless plug. So look, on that we've talked about how, splits don't mean anything, but it is just psychology. And I really do think it shifted the whole rotation psyche that was going on, because as we talked about last week, the
Yeah.
value stocks had been coming up and the growth stocks had been coming down. And you never know how long that's going to last. And we just needed a catalyst to change that. And so you kind of had a double whammy, the after the close or near the close, that Biden came out with his pick for VP, which we leave politics off of this show. But
Yep.
what was important about it is you had this unknown risk that is
Right.
now known, right? So now everyone knows how to factor that in. Of course, we knew that we were going to have Pence on this side, and so now we know what's going on the other side. So all the analysts and PMs can kind of factor that in. So that really kind of changed things. We had a big move up, and then we just got up to our highs over here, and then did exactly what you would hope, is just kind of back away and mark time. And this allows the 21-day to kind of just continue up, and the 50-day to continue up, and again the 200. So this was really just ideal action. Just that marking time roller coaster that we're back at the beginning.
Yeah, exactly. And a mantra that you've used quite often, when needed, of course, throughout this rally is you can't always get what you want, but sometimes you get what you need. So that seems to fit here for this week as well. Now, if we flip on over to TradeStation, we're going to break down the NASDAQ using the candlestick charts and do that day by day analysis that you do so well.
Okay, so this was the same view that we were just looking at on the bar chart, but in candlestick formation, so a daily of the Nasdaq. And we're going to blow that up and just focus on what's happened this past week. Now, here we had Monday's action, and it's exactly what you would have thought. We were down, but in a very constructive manner, and that's because we had this long wick on the bottom, and you had a relatively small, or I'd say medium to small, negative body here, and that was what you were expecting, as kind of just a drift down. Now, this action was not what you were expecting. That was a bit out of character from anything that we've seen going all the way back to over here. So it was a pretty bad day when you have that big of a negative body in there. Your expectation was to move lower down in here, but of course we didn't get that. We got the news that we were talking about, and a very nice positive body, which is a tiny little wick here. So all was good, and our expectation was that we were going to move higher. We did, but of course we ran into this area of resistance, the old highs, and got turned away. And even though this was a positive body, it's sitting down there at the bottom of that entire bar is not what you'd like to see. The expectation was a little bit of going lower or sideways, and that's what we got today with a negative body. Looking at this, your expectation is that you're going to continue on down this way and just really sideways action. So it's not setting you up for disaster, it's just setting you up for more of the same. And let's look at that retracement chart that we talked about last week. So here's that the same daily Nasdaq, but with the retracement lines on there. So again, we were just using the low of the 24th as well as the high of the 7th, and you can see the midpoint there is this 10,671. We held well above that. We held well above the 21 day. But again, that is our reference point. That's where we can come down to and still be perfectly fine. So our expectation right now, based on looking at this daily chart, is that we're going to stay between this line over here and this line, preferably above the 1077 or 10,777, because then we would be above that 21-day exponential.
Yeah. And speaking of the 21-day exponential, another layer of perspective that you provide is Webby's RSI, that really simple indicator, and you're measuring the close versus where the 21-day is. So give us an update on where we are with that after this week.
Sure. So my favorite indicator, I just love the name more than anything, but it is really what I've used forever. Going back 20 years of just looking at the relationship of the bars to the 21-day, and you can see over here in last year's rally prior to the February 19th top, that it was trending nicely, and then all of a sudden you're underneath it and then back above it. So we have this nice little indicator down at the bottom that just graphically shows when you're above it, how much space is there. And we talked about that a couple weeks ago in detail. So let's just focus in on what's going on this week. And you can see where these bars are right in the ideal area, which is between 0.5 and 2%. So your low is between 0.5% to 2%. Above your 21-day exponential. We ended up at 1.77 there, so it's right in the sweet spot. That's what you'd like to see, and it's nice that things have kind of settled down. You can see that the 10-day moving average has picked up a little bit, but that's really just because of the action that happened here. And if we continue on at this pace, we should see that number kind of fall back into the sweet zone, the 0.5 to the 2.
All right. Well, we'll keep an eye out for that next week. And now that we've zoomed in, now let's zoom out and take a look at the NASDAQ on a weekly chart and what you're seeing there, because we talked about how it was a little bit of a roller coaster to nowhere. It didn't make too much progress this week, but we didn't lose ground either.
Exactly. So we're going to do take a step back, Bob Weir style, and look at this weekly. And when you do this, what you're really focusing your eyes on, and let's blow this up just a little bit more, is seeing, is there something out of character with the most recent bar, the most recent week, with what we've seen during this bull market? And there isn't anything unusual. It kind of looks like this week over here, a little bit like this week. So that's a normal action. And look at where our body was. Our body sat right on top of the positive body of last week. And what's nice is we undercut the lows of last week, kind of shaking a really nice shakeout move and having that really long wick on the bottom, with just a tiny one on top. So that's perfect action, but it does give you the expectation of sideways action. It's not really giving you the expectation of moving higher. Doesn't mean we can't move higher. We're really kind of in a news-driven environment right now. We're just waiting for DC to kind of come to an agreement, and that would be a huge risk off the table. All right, so here we have the weekly chart of the Nasdaq back on our bar chart, and we're going to blow this up just a little bit and just focus on what happened this week. You can see that it's closed almost unchanged. And so you always want to look at both bar charts as well as candlesticks, because with individual stocks, we like to look at 3 weeks tight on indexes. Even 2 weeks tight can be meaningful. You can see how we had the 3 weeks tight back over here before we launched higher. So it would be constructive if we could just have a 3rd week tight in there, just holding right at that psychological level of 11,000 on the Nasdaq. So I really like how that's set up, but again, it's not giving you that sense that we're off to the races. It's more, it just kind of feels like more of the same type of action until we can get something resolved in Washington.
Yeah, which more of the same in this case wouldn't be a bad thing at all to see another tight week, but we'll see what happens. Now, we also want to give the audience an update on where we are with the regression lines, which we've been using in this rally, especially lately instead of the channel lines. It's proven to be very useful for us.
Exactly. So just to, a reminder, the regression line starts on the follow-through day back on April 6th, and you can see that regression line is the white dotted line, or that's just the line that is going through all the data as a line of best fit is another way of putting it. And we have a half standard deviation above and below, or the dashed lines, and the full are way out here that we have not been meeting. So let's blow this up a bit, and this is pretty much picture perfect. You want to stay in between these two. Once you get up to the red line, your expectation is to come back down. Once you get down into the green area, your expectation is to move back up. It's just kind of a mean reversion within this really solid, nice, tight uptrend. So very healthy. This kind of, when you're looking at this, is a little bit counter to the other analysis we're doing, where we think, it looked like we were going to go sideways, because if we go sideways, you would be over here underneath your half standard deviation below your regression line. So that would be a little bit out of character. It happened a little bit over here, but that's where it really kind of fell down. So when you're looking at different indicators, it can give you a little bit of mixed signals. Looking at this would tell you that your next move is either right here and then up to that regression line, or the center line there, and then you have to reassess it at that point. But typically it's kind of like a sine wave. You're going up and down until that character really changes.
Well, we'll have to see what next week brings, but we do want to provide some perspective on the S&P 500 and the action that we saw there this week, because we talked, if you rewind a couple weeks ago, about how the S&P was setting up, then it being a magnet to the old highs. So give us your take and an update on where we stand with all that.
Sure, and we'll look at the spiders, because that's rather than the S&P 500, it's the ETF that everyone uses. Just makes life a bit easier. And you can see that, we're almost at these old highs there, the 3908 that was set back in February. So we're within 1% of that. And when something like that happens, it's really, you're kind of a magnet to that level. So I'd be surprised if we don't hit that over the next few weeks. We really just need that catalyst to get that done. Now, on the scarier side of it, we're quite a bit above our 21-day. Now, that did happen over here as well, and then we kind of had that move where we accelerated a bit, and then we paid the price with that gap down. So again, if we went sideways, let the 21-day catch up, that would be really nice, and to see that pop through. Now, notice how this red line, which is your 50-day, crossed through your 200-day, which is this bluish greenish line right there. And that's what everyone calls the golden cross, because it does have significance. And it was lagging the Nasdaq, that where that happened way back over here. But notice the small caps, which is the IWM, which has really been
Mm-hmm.
a laggard for years. We'll just toggle out to the monthly chart on this, and you can see that just using the relative strength line versus the S&P 500, it's been lagging for quite some time. But toggling back to the daily, we have that golden cross that happened this week. So that's positive. Typically what happens is, you've got a bunch of trend followers that are in there, and they will be buying as that 50-day goes through the 200-day, and to keep that momentum going. So I wouldn't expect it to get back up to these old highs for several months, but still it's moving in the right direction.
Yeah, a positive signal. So with small caps looking a little better, and we also talked about a bit of the rotation from growth and into value. Growth looking like it's perking back up. What are your thoughts on it looking like a bit of broadening of the leadership, or what's your perspective on where we stand with that?
Yeah, so we did talk about how they were diverging last week, where the value was coming up and the growth was coming down. But this week, we kind of saw both of them move in the same direction. So they don't have to move away from each other. Look like they're kind of moving sideways to up together, and that's constructive. Like you said, broadening out is very helpful.
Great. And last but not least, putting it all into perspective with your chart that has all of the different levels that you are watching to help investors with their battle plan for the week.
Okay, I'm guessing 75% of you just fast forwarded to this part, and that's quite all right if you want to do this. This is the most important thing. This is your battle plan for next week, to kind of have an idea of what you can expect. And this one is pretty mellow this week. So we've got a few things going on this chart. We're going to blow this up, zoom in a bit, and then we'll take a step back. So
Perfect.
with this, you have our old channel line on here. This is not the regression line, but this is your channel line. So that's a lower kind of floor where you would think that it could come into. And the blue line up here, the horizontal one, is the old high. So we're almost at the old highs. And then here's kind of that middle area of your channel. It's just it's parallel with this one. So that's, it's kind of like the 50% retracement line that we were looking at earlier, where you can expect it to come into there. So our one expectation is just matching this white line here, which wouldn't be down that much. And then also the blue line there, which is your 21-day moving average. And that is your key line, and it has been your key line for this entire bull market. And then, of course, we have this green line, which is the low of this day, and that is August 11th. So the 10,762, we would like to stay within that. And sometimes when you're doing either a pause or what I like to call a shelf, you can come and undercut it just a little bit and then have a little bit of an upside reversal. So that would be constructive. You don't want to see it crashing through that line
Right.
like it did back over here. So that was a line in the sand and it came crashing down. You want it to just gradually come down and see some sort of power on the way up. And then the next thing would be our 50-day moving average, which is this red line right here. If we were to break that in any major way, then you're looking at an intermediate correction. And an intermediate correction can typically, go from 8% to 12% off the highs. And that's a time where you're going to get, additional bases built, but you're going to get chopped up in the market. So if we come that far, that's where you're backing off a margin, you're raising some cash, you're probably putting yourself into some more conservative stocks. But you're not completely running for the hills. You're keeping your very best stocks, your A plus stocks, and then you're looking and searching for the next stocks to emerge. And we had a lot of software stocks get hit over the last couple of weeks, and if that were to happen, they would probably build some bases, and you'll see some come back out of there. Now, the next level underneath that is this 10,182. which is the low of July 14th. And that was the brutal 2 days that happened, that Monday and Tuesday,
Hmm.
where we'd hit those highs and came down. And the market really made a stand there. And it was tested, that area was tested again on, what is that, July 24th. So when you have multiple tests at the same level, it becomes more important. You can think of it as a foundation or a floor. So that is a really critical area. If you break that, then you're really kind of into some serious trouble, because you would be going all the way back down to our February highs, and you don't want to undercut that. If that
Hmm.
happens, it's a completely different mindset. And of course, you don't want to be anywhere near your 200-day moving average, because then it's, you're really looking at a bear market at that point.
Right. Well, now that we have all that perspective, putting it all together for the week ahead, what's the big takeaway for investors, and how they should, what stance they should be taking come Monday?
Yeah, you're watching it like a hawk right now, and your foot is not really on the brake and it's not really on the accelerator. You've got both on. You're kind of just coasting. If you're driving a stick, you're probably in third gear, or maybe you're just putting it in neutral and letting it coast. So you don't want to be necessarily increasing exposure right now. Take each stock one by one over the weekend. Draw some lines in the sand. Remember, it doesn't have to be an all or none situation. You can
Hmm.
sell a little bit at different levels. That's very helpful to do, but you're not really looking to pile in. There's a time to pile in, and there's a time to slam on the brakes. This is neither. This is just kind of marking time, as we talked about at the beginning. So take it easy, and just wait for that catalyst. And I think the most logical, as we talked about last week, is DC just coming to, and it doesn't have to be anything that everyone agrees to, but it's just kind of like the VP pick that was off of the table. It would be nice to see some additional splits happen, like maybe an Amazon or something, even though it's completely meaningless, absolutely meaningless. It has the psychological impact that people like right now. So why not Bezos just go out and split your stock? It's not going to make a difference, really, but go ahead and do it, and let's have a nice little catalyst.
Yeah, we'll have to see if this is the beginning of a new trend for these big cap tech stocks. We'll see, but with all of this in mind, investors are definitely more prepared for the coming week ahead than they were before watching this video. So thanks for adding all that perspective, Mike. And we always have to close with your advice, not just for investing, but for life.
Look, in life is too short. Just be kind to everybody, and you'll be happier, and everyone around you will be too.
Perfect. On that note, we hope you have a great weekend, everyone, and we'll see you right back here next week for the ultimate finale of the stock market update.